With all the incredible power that is in artificial intelligence and the access it has to the markets, the reporting that you can get, the interpretation, the insights that you can glean from it, it's still like a child. You have to tell it exactly what you want, and you have to question everything that it reports back. I saw that this morning. So every morning I create a ranked list of macro events that happen and how they might be impacting today's market. Now, you can put in safeguards and ask it to validate all the data, source it, etc. But there's only so much you can do. It comes back, and then you have to go through it and say, did this really happen? Did he really say that? When was that reported? Or are you just taking something and hallucinating? And that happens quite a bit. So this is what I'm finding out anyways, after using AI now for the current implementations of AI over the past few years with the advent of ChatGPT and then all the others that have come out, all the other models, and now Grok. And I'm finding that they want to please you. I know that sounds really weird, but the AIs, they really do. They want to please you. They want to give you what you want to hear. And so they'll do that, which in some ways is good, but it would be good if AI, and this is not a sponsorship, by the way, it would be good if AI acted like ground news, where it could give you both sides, give you this side, that side, and then the blind spots, and then the middle, but more from a factual basis. But I just wanted to bring that up because that's important, because I'm getting into AI as a tool very heavily, or I have been for quite some time. And I want to show other people how to use it and how to make the best use of it and not be misled by it. That you got to keep on top of it. It's not like a panacea. It's not, the ultimate source of information, even though it has access to all information. So the reason why I'm talking about this is that, if you look at the title of this particular show, it talks about tariffs and that tech may be at risk. And so I ran my reports and it came back with, let me just read the following. It came back with, this is what it wanted me to give for the opening statement. I questioned it every time, I don't just throw things out there and say, oh, okay, I'll blindly follow what Grok says or what ChatGPT says. It says, of course, it starts off with my greeting and everything, and it says, Lutnick's tariff bombshell. Now, bombshell implying that, oh, this just came out, or this is something that we have to look at. And of course, the way I know for a fact that this didn't happen is that I just look at what, and by the way, my report's supposed to be focused on what happened over the past 24 hours. And it said, Lutnick's bombshell has markets on edge. Tech exemptions could vanish, sparking massive volatility. With the VIX spiking, it's been going down. It did spike. In SPX options screaming, it's still screaming. Today's your shot at fat-tailed returns. Let's unpack the moves and nail those strangles. All of those things are true, except that the lead story, Lutnick's tariff bombshell. And so I go into it a little bit deeper, and it says that, Lutnick makes these comments, which he did make these comments back, I think, 2 weeks ago, that the tariffs and the exemptions that were made on tech may only be temporary, implying that they could change it at any time and you got to be on edge. And so this report is implying that he reiterated that, and that's what I was going to go with. And I said, is that really true? because the market didn't react to that at all. I mean, did they take any specific actions? Should I be leading that as the lead story on this morning? Of course, I have limited time to put stuff up, and I put up tech tariffs, but that's what I wanted to talk about this morning. That I create my my title and my lead story and my thumbnail, all based on what the overnight reporting is. Of course, I always look at it, and this morning, though, I was a little bit late, and I thought, okay, should I change it and come up with a new story, or should I make an example of it? And so that's what I chose to do, make an example of it. So I thought you might find that interesting, and I'm going to talk about it a great deal more, how you can actually go about validating stuff that you get back from these large language models, so that you're not going down a path that that might look like you have egg on your, or make you have egg on your face, because that's not always a good look. Some of the other stuff that it came up with was, spot on. Of course, I checked everything. So the top ranked events from a macro point of view, it says tariff exemption uncertainty. That's questionable because the market seems to have digested all that and it's going up. Gold surges to $3,500. Oh, that's unquestionable. It has definitely surged, and and most investors are looking at it as a safe haven. Fed faces rate cut pressure. Again, another valid story. That's number 3 on the list, because there are all these reports that Trump is considering firing Jerome Powell. But if you actually digest all the news, he's been interviewed just recently, I think it was yesterday, or maybe the day before, that he has no intention of firing Powell. So here are reports that are bubbling up that have elements of truth, and they're misdirected, though, because the AI doesn't really look at everything with the same kind of value perspective that you do. It just says, oh, the market's saying that Trump's going to fire Jerome Powell, because that's what they want to do. They want eyeballs on their news. And so the AI just says, oh, this must be important, so I will say, hey, this is what's out there. But no, as far as I know, Trump is not planning on firing Jerome Powell. He would probably like to, I'm sure. But, should it be, third on my macro event list, and should I take actionable trades based on that? So what I'm saying is that what we do is that we're looking at all these different macro events, and from a 0DTE butterfly trader, they're all kind of in the background. That's the veneer. And we want to have market situational awareness, so that, but generally they don't really affect us going into the day's trade, because we're already predispositioned based on the volatility, the VIX where it is, because that's going to determine the price of options and what kind of exposure that we want to that general risk, because we generally put on just one trade and then plan for that. We're looking for those tail risk events. And so what happens during the day is, once we've put the trade on in the morning, it's kind of out of our control. We take on probabilities from that point of view. However, we also have this other upcoming part of the service where we're looking at tail risks, extreme tail risks. And there are 3 different categories. We look for 0DTE events, we look for 7 to 10 days out, and we also look for quarterly. And so this report right here could definitely be part of the ingestion that we use for 0DTE trades, and possibly for 7 to 10 days out. And so for the 0DTE thing, I think that this morning's report was a complete fail, because I wouldn't have taken any of these positions. Going on, it started to talk about OPEC production increase. Of course, I reported on that the other day. And the report says OPEC confirms May production ramp up, pushing crude to 1.5, down 1.5%. Now remember, the reporting was that that they were going to cut, right? They were going to cut production because that's what Reuters was reporting. And but now, and then I said, you got to pay attention to that, because really the overall sense is that they're not going to cut production, but they're going to increase production, and then that's what's causing oil to come down. So you got to pay attention to stuff like that. And of course, China stimulus expectations. That's another thing. I think that the tariff exemption with Lutnick and China stimulus expectations are kind of related. Of course, China's under tremendous pressure with the tariffs, and their recent report on their sales and GDP showing a big surge in their economy over the last month, which I thought was probably fake news, at least from their part, or propaganda, that they're trying to flex and say that, oh, these tariffs, they do not hurt us. What does not hurt us, what does not kill us will make us stronger, and we're doing just fine. In fact, last month, not only did we have those tariffs, and yes, exports were decreased by 65%, but we actually had an increase in overall revenue generated. Right. So that was kind of interesting too. So with all that said, hopefully that is interesting to you. I'm going to be talking about it a great deal more, and how we can use these reports, but also how we can verify. So what is it? Trust but verify? I don't even know that you can trust. You have to take it in and say with a skeptical eye, yeah, I've been following that and I don't think so. And so then you ask it again. By the way, the AI is very accommodating, because if you point out that it's been reporting bullshit or that it's hallucinating, it says, oh, entirely sorry, very sorry, I just did that because of blah, blah, blah. So I know some people like that. So why don't we get on to what you're really here for, and that's the 0DTE trade, if you're still with us, right? So what we're going to do is now go on to the charts. All right. So I guess we're going to start out with the volume profile. We've been talking about entering into this node up here as kind of a safe haven for the market once it gets above there, and it did get above yesterday and this morning, and now it's this morning it has dropped back down out of that node, but it's finding support on this level. Okay, that level, by the way, the bottom of that node is at 55.10. We've been watching that for several weeks. Well, more than several weeks, even last year. But way back here when we had that initial move down because of the tariff scare. And getting back up above 55.10, I think, is key for this market to continue its move up. And I think it will eventually do that. I'm not making that as my prognostication, but I think that's where we're headed. I think that, although we do have this big gap down here, and all gaps must be filled. Remember that. Someone told you that once, I'm sure. But anyways, let's go back on to our three main things, and that is looking at the VIX, where we look at the level of VIX to determine our exposure to the market and the available premium. We're going to look at market direction, and then we will look at the structure, which we kind of did already. So the VIX continues to drop from its big high, and it was an incredible spike that we had. But now it is still in the upper third of the Goldilocks zone. So we are still very wide on our out-of-the-money flies, looking at 35 to 45 wide. Batmans are starting to sink down a little bit out of favor. Now I would say that it's probably only a 40 to 50% idea, So basically flip the coin. Hey, do I do a Batman today? Literally flip a coin. And make sure that if you do a Batman, that you put him sufficiently far enough out that You're not going to double up on that risk in between the two positions. The big ass fly, where is that? We haven't reported on that lately because it was just assumed that, big ass fly was way up there. And it has been a great trade, by the way, over the past several days, especially since we've been kind of consolidating and going sideways while we're trying to break through that 55.10 level. So let's take a look at that. And yep, as I said, the big ass, that's not the big ass fly, that's Tesla. There we go. So we're at 13 3/4 or 13 and a half, right around there. 13, just under 14. That is definitely putting us in the yes for the big ass fly camp this morning. What market reports do we have coming up? Let's find out. Finance, market reports. What's going on for Friday? Come on. Revised consumer sentiment, revised inflation expectations, revisions. Does anybody ever pay attention to revisions? But anyways, that's what we've got going on this morning, but not until 10 a.m. So how does that help us with the big ass fly? Because normally what we're looking for the big ass fly is that market report coming out at 8:30. So we put the trade on prior to that, looking for volatility crush after the market report. But if there's no market report, are we going to get that crush? Probably not. And so the bleed on the big ass fly is going to be relatively slow. We're not going to have that crush. But if we're maintaining this kind of range that we've been on all week, then it can still end up being a really powerful trade. And I know that for many of our clients here at 0DTE, it has been all this week. That big ass fly has been a great trade. So I still recommend it. In fact, I'm going to put one on very soon. All right, and let's go back and see where that puts us on the situation. So when we take the big ass fly into account, that essentially is saying that we should be on the wider side of our range of size of trades. So if you're on the XSP, which is 1/10 the size of the SPX, and the SPX says 35, then you go 40 or 4. If it says 45, then you go 5. Get it? Because 5 wide on the XSP is equivalent to 50 wide on the SPX. Same thing with SPY, by the way. All right, let's look at market direction. And we are well above the moving average. And you can see the moving average is just starting to turn up now too. So we're sailing. And so we are bullish bias today. That means if you're doing a single out of the money fly, we're looking for long call flies. And let's take a look at as you can see here, we're just below that big node, but we're being supported by this market structural level, which is coming in right at 54.93. Now, if you notice, it has been significant even from yesterday, found support there. Let's take a look at what that looks like on the big picture. So 54.93 is this level right there. Here, I'll point to it. Right there. So if you see that little protrusion inside between the big volume nodes, that is providing pretty intense support for some reason, and it's been persistent. If you go all the way back here to June of last year, that level was first established on a gap up. See that gap right there? And that's what we mean by market memory. You have these events that happen weeks or months ago, even years, and they end up coming through and being significant structural levels that you need to pay attention to even now. And that's true no matter how far back you go. That's why an analysis of the volume profile, taking in the entire profile with all of the history within the range that you're trading, is absolutely important. So there you go. Something that happened back in June of 2024 is literally giving us support here today in real time. Now that is profound. All right, back to the big head. All right, so there you go. That's the market report for today. I hope you find that interesting. If you're interested in our strategy, our process, our methods, you can get a good taste of it by joining our Skool, our Zero DTE Academy. It's our Skool community. The link is down below. And next week, you're going to see a new community come on where we're going to talk about tail risks. And that's going to be that is going to be life-changing, I think, for a lot of you traders, especially those that don't have a lot of time to watch the markets, or you have small accounts and you're looking for a strategy that most of the big players are playing. You know, the guys who are making the real money. It is outside, I think, what most retail traders are used to, but it is exactly what the pros are using as their primary. One of their primary strategies that will either hedge and protect their accounts, or looking ways to grow small accounts or get huge advances in your account. It is a well, I'm gonna leave that for later. But I'm just saying that when you see this strategy, it's gonna blow your mind, and I'll do a video on it over the weekend. All right, that's about it. I want to thank you all. Coach Ernie,